Hi everyone, today let's get straight into the charts, and then we'll go over my results for the day, and my positions going into tomorrow. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Starting off with the S&P 500 on the hourly and the 4-hour here, you can see we gapped up, came into resistance, got rejected, and then moved down throughout the rest of the day, filling the gap and actually finishing slightly negative here on the S&Ps. And here's what that looked like on the 4-hour. Came up and tested that 144 EMA on the 4-hour. Momentum on both charts is moving to the downside. We are right at the 50 here on the hourly, so it'll be interesting to see if that breaks tomorrow. If we see a break at the 50 on the hourly, should expect that we're going to come down probably to the 384, which would correlate with the 21 EMA here on the 4-hour chart. There's certainly potential for some support here at 385.50. That's pretty much the range that we had been in for the last couple of weeks. But either way, momentum is bearish here slightly to the downside. Jumping over to the hourly here on the left chart, you can see that the momentum still is bullish. We did get the cross. We're in green momentum here now. And we did stay above the 50 on the RSI. So momentum is still slightly bullish. And I would expect to get a bounce into the morning. I want to see that momentum on the hourly chart turn green. That would be ideal. But it's worth noting here that the daily chart is still showing bullish momentum. If this does change tomorrow, then we should expect that we're going to see more. But the daily chart is showing bullishness. We have to expect that that's going to hold until it starts to fail here. And we could even see a slight downtick in green momentum tomorrow. And if we do see that, then we should expect that we're going to move down into the CPI data on Thursday. Similarly here on the NASDAQ, we got a gap up, rallied into the middle of the session, and then fell into the second half. But interestingly, that gap did hold up. So we didn't get below the gap. It was slightly bullish on the day for the NASDAQ. NASDAQ showing a little bit more strength in the S&Ps for the first time in a while. We did talk about that on the Sunday episode, so a little bit expected that tech is going to hold up here a little better than some of the others. In terms of support, we could certainly come back into this 268, 269 zone for support. We also have 9 EMA here on the 4-hour that should be coming up into that same zone, potentially a retest of the 9 EMA, which would be the 21 EMA here on the hourly chart. Of course, momentum still fading here on the hour, big steps down, so you would expect this to continue on the hourly. 4-hour could go either way. Maybe we see something like this where we have a couple of gradual down steps, slight bearish momentum, and then we continue into that strong bullish push. It'll be interesting to see on the hourly if we do get a swing below the 50 and a push back through without getting to oversold conditions. That would be a very bullish condition going into that CPI. On Thursday, I'm still very bullish until we get the CPI data. I think we're going to push higher into that report, and then we'll either get a change of direction or it'll push us through these highs and start to make new highs depending on what the report states. Moving over to the Dow just for a little bit, I do want to highlight that the Dow was actually the weakest of the three. SPY was in the middle and the NASDAQ was the strongest. That's unusual for what we've seen here recently. You can see we got strong bearish momentum already on the hourly here for the Dow, took out the gap and then moved lower to that next high here. And then we kind of sat on that. Certainly at resistance, could move a little bit lower. We're already on the 9 EMA here for the 4-hour. Hopefully we see the hourly hold here on the Dow. That would be great. That further push up into the CPI data. But interesting to see that the Dow is starting to underperform, which should indicate that this might have a little bit more legs than we previously thought. Moving over to Tesla, it's worth highlighting here that Tesla was very green on the day. You can see we gapped up, rallied throughout the session, and the fade off that we saw here on the hourly was very minimal. Very slight red bar. Did hit that 50 EMA on the 4-hour, which is probably going to have some resistance. If we do get through that in tomorrow's session, then we should expect the NASDAQ to move higher. Tech as a whole was pretty strong on the day, which, like I said, means that this rally should have a little bit more legs than previously thought. Moving over to IYT, the transportation ETF. As a leading indicator, this is showing us that stocks are going to go higher. Usually the transportation ETF and the Dow move pretty closely together, but interestingly, we got the gap up and came into the middle of the range, more like Tesla than the Dow. So we held the gap and we closed much higher than we started. We should expect that to continue. It is worth noting that the hourly and the 4-hour are stepping down on momentum. We got overbought conditions here on the 4-hour, so that generally means we're going to get at least a little bit of a retrace, potentially fill that gap in the early portion of tomorrow's session, and then we get the continuation from there. At least that's my hope. I do think that this is still a bullish situation. Maybe we get a slight downswing, like I mentioned, here just to satisfy this hourly momentum. And then we get the continuation here on the 4-hour, kind of like we got here previously, where we rallied aggressively, came down slightly, and then rallied aggressively through the next two sessions. And that's really what I'm hoping for going into tomorrow and Wednesday. Moving over to semiconductors here, once again showing quite a bit of strength. We came into support at the end of December and then rallied from there. Gapped up here today, did not fill that gap, closed above the open of the day, so bullish on both accounts, and you should expect that semiconductors are going to continue higher here. Looks like the 144 EMA on the 4-hour continues to be support, which we have been above ever since 9 November here, which is a good indicator for stocks as well as the NASDAQ. Moving over here to XLP, we have consumer staples selling off throughout the session. Very red day here for consumer staples. So we're starting to see a little bit of a rotation out of safety and a little bit into growth, which is good for the markets. It could be an indicator that we could be heading higher. Again, everything's going to depend on CPI and what the Fed does in February, as well as earnings here over the next few weeks. But right now, we're seeing a little bit of strength in growth and a little bit of weakness here in those protectionary stocks. Moving over to DXY on the 4-hour and the hourly chart here, you can see we sold off throughout the session. As you would expect, stocks were going higher, so the dollar was moving lower, which was a continuation of that larger move down that we saw on Friday. But at this point, we are getting a little bit oversold. We've been oversold on the hourly for a while here, almost oversold on the 4-hour. At this point, you would expect a little bit of a retrace. Maybe not right away, but it could be at the beginning of the session, maybe back up to 103.80. If we do get a rejection from there, that would be very good. But we do have to be a little bit cautionary here now that the dollar has sold off so strongly over the last few days. Not quite at support here. We do have a couple more points until we get down to about 102.35. That would be where I would expect to see a little bit more structure, maybe slightly above that, 102.50, somewhere in that zone. But either way, I think this is going to go down a little bit more, even if we see a short-term retrace. Moving over to JNK, you can see JNK is continuing to confirm that we are going higher and that growth, risk-taking is coming back into the markets here at least a little bit. Hourly chart showing some overbought conditions, did fill those gaps like we talked about, and we held at that level. You can see we gapped up and rallied throughout the session and came down just slightly here on the hourly. And here's what that looked like on the daily chart. You can see the last two green days that we had. Still green here today, maybe a little bit indecisive, not overbought here on the daily chart though. And worth noting that this does look very strong. We had some lows here and some higher lows. And now that we've pushed so dramatically through the 144, you have to expect that this might continue here for a bit, and that this might be signs of a solid reversal here on JNK. Moving over to TLT. TLT actually gapped down and then rallied throughout the session. You can see on both charts what that looks like. Closed the day at 105.20, gapped all the way down to 104.30, closed that bar at 104.04, and then rallied all the way up to 105.80. So big swing here on TLT, but the structure is still intact, still bullish here, which is still, in my opinion, good for stocks and good for the overall financial markets. Finishing up here with the VIX on the hour and 4-hour, you can see we gapped up pretty significantly, fell into the beginning of the session, and then rallied into the end of the session. This is generally expected as we come into that CPI period and we start earnings. Volatility is obviously going to move up into CPI. Question is how far, and is higher volatility going to mean lower prices? Doesn't always correlate when we come into big news announcements. They can both go up together, equities along with volatility. But interesting to know here that volatility is starting to move higher, and that could be an indicator of low prices, but again, still looking at that news announcement as the bigger cause here. Moving over to my accounts, you can see I did take a small loss on my IRA. I did jump into a covered call here on the Qs, which should have been generally profitable, but it was down a little bit because I did roll this put up and out. I still think I'll make money on this tomorrow. I think we're going to hold generally where we are, if not move slightly higher tomorrow as we get closer to that CPI reading. I think we could get a double top at the top of the markets where we had today. If you look at the Tasty charts here, you can see we did come up into that upper bound, come back into the middle here, still showing a bullish trend. And if we do get the rally back up to that zone tomorrow or the next day, giving us that double top at 275, I think that's pretty likely, which would make these positions profitable going into tomorrow and the next day. But otherwise, we'll see how that pans out. Either way, I'm fairly protected. I do have $1.82 of downside protection on my Roth position. So down to 269.20 or so. And then on this position, we have $2.65. So down to 268.45. So a little bit more downside protection going into tomorrow. But if we do start to see a stronger sell-off, I might make some adjustments on these positions. But right now, this is what I'm looking at. Let me know down in the comment section what you think the market's going to do and what you think CPI is going to do to the markets. Definitely like and subscribe if you got any value out of this video. I really appreciate the subscribers. I do see a lot of viewers that are not subscribed. But if you do watch this channel fairly regularly, a subscription would really help out the channel. And make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.